Okay, welcome back again. My name is Vendik, and we will continue from our last series, okay, on price action class. Today, we want to treat liquidity, okay, so we will take so many examples and then what is liquidity. All right, so without further ado, we'll get started. Okay, so liquidity, it's an area in the market where we have some sort of orders being placed. Okay, so we have so many types of liquidity. We have double eyes, okay, swing high and swing low. Okay, we have double eyes, okay, and then double lows. We have daily high, we have weekly high, we have monthly high and lows. Okay, so there are a whole lot of stuff. So I will show you how this is in chart. Okay, so I try as much as possible to make sure that this tutorial is just the screen and my voice you will see, so that you won't get distracted by any other thing. All right, so in this part of series today, we'll be talking about liquidity, okay, and how to spot them in the market. So it's actually everywhere, okay. So what we're gonna to make you different from another trader is ability to know the one that is gonna hold, all right, and this tends to be out of a whole lot of practice and being on the chart. Okay, it's not that all your life you're going to be in chart, no, but at least for the start you're actually going to give much hours of your day to the chart, so that at least you get to know one or two things. Because when it has to do with trading, okay, what other mentorship classes, what you will not hear from mentors is that they will tend to tell you that there is one special thing they will tell you that will make you to be profitable. It's all a lie. It doesn't work that way. Okay, it's when you spend time with the chart you get to realize, okay, what really works and what does not really work. But most of this concept it was created out of intensive study of this particular chart, and they tend to give it some name. So you just need to follow it up, okay, and then try have a starting point. Okay, all these are just to give you a starting point. Every successful trader has one particular thing he's doing that is always giving him money at the end of the day. Okay, so their chart is not always rumple and the rest of so many indicators. All right, so as you can see, this is just my chart, and it doesn't go more than this. All right, today being Tuesday, and we are on a 15 minutes time frame. So if you just go down a little bit, you see a whole lot of liquidity sitting almost everywhere. Okay, so let's start from okay, I think on this chart I've already marked up my swing high and swing low. Okay, let me go a little bit deeper so that the chart may have a whole lot of concrete information that we can work with. Okay, so this is a GBP USD. All right, so saying this alone, this is what I'm anticipating on GU. Okay, a buy, but with a whole lot of a sell stop, a sell order. Okay, so you just really need to be very, very sure. So I believe that this place now I have liquidity sitting here. Okay, today I was expecting a card news to give me an impulsive move, but it tends to give me something very, very small, not really. But actually, we are still running on, I think, 40 pips in profit, but that doesn't matter. Okay, what matters is liquidity to us as it stands now. So we have like roughly four types of liquidity or so. Okay, we have equal lows, equal highs. Okay, swing highs, swing lows. We have daily, weekly, and monthly liquidity pool. Okay, so let's take this as equal highs. Okay, okay, let's take this as equal highs. So if market creates equal highs, okay, you tend to get a liquidity in the next pullback, right? And then you sell off from there. This is what I mean. You were going up, you had a retracement. The next retracement did not break this other structure, did not break this. Don't know if you can see. The next retracement did not break this. It gets here and reverse. Remember, in in market structure, okay, for you to have a continuous uptrend or a continuous downtrend market after retracement, it must also always break the previous high, okay, for you to form another new range. Okay, so if you not watch that video, I think you should go back so that you can document everything. But in liquidity pool, okay, we tend to create equal highs. Okay, equal highs means trade bouncing off a particular point, okay, more than once. Okay, it gets there, reverse, create a high, had a retracement. Okay, create a high here, had a retracement. So the next pullback supposed to be above the previous high, okay, to create a new range, but the market fails. As it fails, it came back, all right, create a normal lower low, trying to create a new higher high, but it fails too, creating another lower low, trying to create another lower high, it fails. Okay, then before a pullback, and then we had a change of character. So as I always do, if I give example, all right, I'll always pull it out, my drawing out. So this is what I mean. So if we want to say equal eyes on liquidity, so at a certain zone, market creates something like this. Market creates something like this. So automatically there is a immediately these two times a market bounce off here two times. The next time coming, okay, you know that it's just coming to pick the remaining order that was there. Okay, just coming back to pick the remaining order that was there. So you really need to put this in mind. All right. So this is liquidity and how liquidity works. Okay. So with that being said, we want to treat another one. Okay, so for example, immediately you get a change of character. Okay, I think we would treat that as the series is going. All right, immediately you have a change of character and you have impulsive move. Okay, that was your opportunity for you to sell. The market has already confirmed that it's reversing. So these are things you really need to put in place. So that's on equal lows and equal highs. So another thing we want to talk about is swing high and swing low. Okay, so at a particular time frame that you are, okay, market always tend to create equal highs and swing high and swing low of that particular, like, okay, let's say we are in 5 minutes and this is today's chart. Okay, this is today's chart. Yesterday we came back and clear yesterday liquidity. Okay, remember, all right, market always drop the liquidity. So we came back yesterday to clear yesterday liquidity. So immediately we clear, we now started moving forward, upward. But remember, this is a reverse point. Is we did not yet confirm the trend until this particular level is being broken. Until this particular level is broken. So now we confirm that we are up. Immediately this point was broken. Okay, okay, I get in, but that was too risky though. I get in, but I could have waited for this to confirm. The second one could have waited for this to confirm. Okay. So, but we chop it around for some times before we now break upward. So that's it. So this creates equal lows for me. All right. Remember the first one I show you are equal highs, but this create equal lows for me, and I have a change of character on that particular time frame. Okay, the 5 minutes that I was looking at to for my entry, I have a good change of character, and I get into the highest retracement I was expecting was this. Okay, I think that's 40 pips SL. So that was the highest retracement I was expecting from here. And I think for like 1 week, we are almost just dancing around here and we are trying to reverse. So anything below this, I will be out of the market and I'll collect the loss. So that's how to identify equal highs and equal lows. So the next thing we want to talk about is a swing high and swing low. Don't worry, we can use this GU and then explain all these things because we always find it on the trade all the time. So equal highs and swing high and swing low. If you see, it's always something that is always on my chart. Okay, because this helped me to have a trading range. Okay, so currently, remember on market structure, we talk about when market breaks a particular previous high, we create another low. We create a new trading range. You remember that? So this was a market structure. Okay, we break this previous one. Okay, it breaks this one. Let me take something and indicate so that you see. It breaks this. At this point, we create a new high, and a new high to here was our new trading range. So We had a retracement, we bounce off of it, and then we create a new trading range. Okay, so on the new trading range, we had another impulsive move where we break above the previous swing high here. Okay, we create another sort of new trading range. Okay, we create another trading range. Okay, so that's why I mark up this swing high and this next swing low. All right, that's how I mark up this swing high and swing low. So this become our new trading range. So we retrace in, all right, to our a discount rate. Okay, I know in the course of the trade we'll get to know different between premium and discount in trading. So currently on this we are on a discount region, so we're supposed to have impulsive move. And mind you, this is trading. Okay, market is always right. Okay, we might decide to break. So if we break below this swing high, it simply means market has reversed. But we since overall trend of the market is upward, okay, so we are anticipating to create a new high above this swing high. Okay, so that we can form a new trading range. Okay, so that's how it is. So this is how equal swing high and swing low is created. So I think this really explain a liquidity pool for you. Okay, so I think in our next episode we will be discussing about institutional candle. All right, so liquidity is always established at a level where stops orders are resting. Okay, where stop orders are resting, that's where liquidity always that's where we can find liquidity. All right, so liquidity is formed where stop orders are being placed in the market. That's where stop orders are established. So we have buy side and sell side liquidity. All right, and please put all this into consideration. All right, so that you won't fall into a liquidity grab. All right, most of the traders they would tend to keep a buy stop, okay, because they have this bounce back. Sometimes market can decide to go above the swing high, okay, pull back inside the range, okay, and start creating change of character, and then the market will move back. So because the range is created, okay, the swing high is created, doesn't mean that immediately it breaks off of that the market is bullish. No, even if it broke out of it, you need to really wait for confirmation that you are uptrend before you get into the market. Okay, so we don't react like that. If you react like that, 5 times out of 15 trade, you will always be stopped out. Okay, so please put this into consideration. I know there are a whole lot of persons that are doing is it breakout strategy, all those breakout strategy, everything. All right, so be very, very sure and practice more so that you get. But this is all about basics, about liquidity. ICT will come up with a whole lot of things because they are trading 5 minutes. Okay, smart money concepts. They are trading 5 minutes, so they do come and find liquidity in every 5 minute range. Okay, it does hold normally. It will hold. Okay, so this was a liquidity. All right, this was a liquidity. But if you are checking it from 1 hour, it's almost the same thing. But this gives you more details. All right. So if you check it on 5 minutes or 15 minutes, immediately you see you broke out of this. This is what triggered my trade. And then I was confirmed after the reversal twice from this area. I was confirmed that I'm going to be bullish and I get it. So already. I think I was trading at 40 pips. So I really trying to hold this trade for a very long time, maybe probably a week, all right? Probably a week, and then I'll see what I can get out of it. There's no guarantee on the trade yet, okay? Because all these are still liquidities. It might decide to bounce off of or any of them, depending on what the market is doing. So I was waiting for CPI today, but I didn't really get anything out of it. So for now we'll still keep the trade running. Okay, so I think this is all you need to know about liquidity. So tomorrow I'll try and explain institutional candle, and then we get into entry types, imbalance, and premium and discount. Okay, so it's just one after the other. So if you're just starting trading, okay, you can just follow the course one after the other. Okay, And if you are following us live, like as we are dropping it, I think is the best thing you just need to do. Okay, just follow it up one after the other. At the end of the day, you will realize that you almost know everything about price action. Okay, so um, if you found this video interesting, okay, don't forget to do the YouTube business. Drop a like and share so that every other person can get the information. Okay, see you in another episode and peace out.